Today we will take a short look into the future, both the future of world energy production and also the future here on this channel. So stay tuned, we're jumping right in. Hello and welcome to another video by HKCM Global. My name is Joe and we just launched this very week. We launched our daily market analysis service globally. So as of this very week, wherever you are at on the globe, you can get access to our daily market analysis service. You do not have to wait just for some video to come out at some point in the future out random, but you can go via the link in the description, pick up a subscription to whatever market you prefer out of our 200 markets that we analyze on a daily basis. But let's cut the ad block and jump right to the meat of it. Today, we're going to take a look into the future, possibly the future of world energy production, but definitely the future for this channel here. But in addition to those 200 markets that we already analyze on a daily basis, we will soon also launch a new package including precious metals and also industrial metals like uranium, silver, gold, copper, and exactly that very first one, uranium, is the one that we're going to focus on in this very video. Of course, naturally, the word uranium doesn't come without a bad aftertaste. One tends to think about words like Hiroshima, words like Chernobyl, but those very sad instances of human history aren't everything there is to uranium. The flip side of that uranium coin, the bright side, is that uranium worldwide helped provide cheap and somewhat clean energy. And especially in a time where more and more governments worldwide become ever more cautious about their carbon footprint, about their CO2 emissions, nuclear energy is a clear pathway out of the trap of burning ever more fossil fuels to provide the energy for an energy-hungry economy. Energy is human progress. Energy is economical development. There's just no way of detaching one from the other. Some super green socialists would like to make you believe that, but the reality is there's just no way. And so that's why in a world where we want to get rid of natural gas, we want to get rid of fossil fuels, of burning even coal, nuclear reactors can be a vehicle to do so in a clean and carbon-free way. And I don't want to dwell on the topic for too long because we're gonna take a deep dive into that very topic in a future video. But that's exactly why, for example, companies like Rolls-Royce and plenty other companies out there specialize already on small modular reactors, where they're just not gonna have these huge nuclear power plants, yeah, like you would know already, but where they are working on small reactors that can just be placed in some parking lot and provide individual companies with lots of cheap energy. But I don't want to get ahead of myself. That really is a topic for another day, and I'm looking forward to delivering that research to you. And since I assume you're here for the charts, let's jump right in there. Okay, so regarding uranium, there's two markets, two assets that we analyze on a daily basis in an upcoming package that you can book. The first asset, naturally, is going to be the spot uranium market. Here we chose the Sprott Physical Uranium Trust. Here the price in Canadian dollars, because it's listed on the Toronto Stock Exchange. And to quickly share with you our imminent outlook, we see the physical uranium as having established a overreaching wave W top over in February of 2024. And ever since, we see the physical uranium trust in a huge downward momentum, having so far established an A, B, C, leading into a bigger W, X, Y correction, and currently we are in the making of that very last wave Y of an overreaching wave Y. And to deliver an even clearer picture on that, let's jump to the overreaching chart here on the 1 week chart. So before we've been on the 4-hour chart, meaning now with the 1 week chart, every single candle here is 1 week. So we are on a major long-term outlook here. And as you can see here, sadly, we're somewhat in the middle of no man's land with the uranium, because we still see quite a bit of price action to develop to the downside up until that point, and only then after we reach the W wave. You remember the one that I just showed you here, the W wave that would be comprised of that bigger Y wave. Only then, when we reach that price target here, then we would see further price action to the upside. However, that then would not indicate a prolonged, sustained upward move, but that would only be a correction, a counter correction, if you will, before further downside action would be expected in the chart. So from current levels up until that Y wave, we would see another maybe 20–15% at least downward. And then from that area here, we would see nice gains of at least 50%. But all in all, we still expect way lower lows, and from current levels all the way to here, that would be another 50% price cut. So if you think about jumping into that market, I would definitely wait until we reach those zones over here, because in that area here of $16 to maybe $17, the chances of getting a good entry into the market would improve dramatically. And if you're lucky, maybe by that time we already have our package available for you to subscribe and get daily updates on that price development. But that's not everything we want to look into today, because for every single metal that's got pulled out of the ground, there always is miners. And wherever there is miners, there is companies that you can invest in. And wherever there is miners, we like to take a look not on specific individual miners on their own, but also to take a look at a miners ETF, because mining already is quite a volatile business. So we want to reduce the risk a little bit to analyze miners in an accumulated ETF and not just stick with individual companies. And naturally, as one might have guessed, the miners of a certain metal, like in this case uranium, always are somewhat related to the price action that will develop in the underlying metal, obviously. However, miners are not a complete mirror of the underlying asset price, but rather a little bit of a leverage and also a forecasting tool, because the price of an underlying commodity like uranium is mostly determined not only by speculation, but also by, of course, the real physical demand for that set product. And with miners, it's a little bit different, because with miners, there's a lot more of speculation towards future prices. And so that's why miners are never like a clear mirror image of the underlying commodity. And so in this case, we see in the imminent outlook also a wave A top as formed here already. We see a wave B top as either already in or about to be in. And so that means in this case with the miners from these levels onward, we already have quite a good risk to reward ratio, because if we take that prediction of the B wave by face value, that will already be a 70% upside, 75% actually even. And in our current scenario, the downside really is rather limited. But before we're gonna call this with real certainty and conviction, we will have to wait for the chart action to really react to those areas here and develop a counter movement. And so what does that look like on the overreaching time frame? On the overreaching time frame, we see the chart is in an A, B, C correction with honestly right now a real deep correction within that upwards trending movement. But as of currently, we still see the price action to not break down to the downside. Of course, we have that scenario also here in the charts, currently rated at a 34% probability. But the main expectation still remains, even though the course has come down so low, we still expect the course to establish here a higher top to finish off this overreaching B wave, and only afterwards to go into a steep decline, reaching courses of definitely below 23 Canadian dollars and potentially all the way down to our optimum price target of 12.88. Before then, and only then, having developed a real major low for probably years to come. And so then, that was it for today. Hope that was of value for you. If you want to stay up to date and never miss an opportunity on your preferred assets, as mentioned before, in the description, there is a link taking you to our website where you can get access to 200 assets, 200 markets that we analyze on a daily basis, and where we also send out notifications on every single entry that you might want to take into the market, all based on our winning Elliott Wave theory. And if you just want to hang around for free value that we provide here on YouTube, also on X and on Instagram, down there in the description, there is links to both X and Instagram where we also post daily. And of course, obviously down there, there's the subscription button for YouTube where you can subscribe to this very channel, all free of charge, turn on the bell notifications, and we will scale those videos here up all the way to 5, 6, 7 videos a week. We came here to stay, and we came here to build a successful financial future with you. So see you soon. Take care. Bye-bye.